Have you ever wondered how much money you're losing every single year because you don't understand write-offs? Is your financial life a hot mess? And do you dread tax season? If you said yes to any of those things, you're in luck because Michael Glaspie is here today to make finances fun and easy for us. Mike is an Army Green Beret turned real estate entrepreneur, and he and I have actually known each other since we were babies in the real estate world. And we have done so much together from the beginning. We built a real estate team. We've invested in real estate. We've done flips, short-term rentals, long-term rentals, you name it, conferences, the whole shebang. And Mike is a straight up G. So a few years ago, he pivoted to start G2 Business Solutions, which is a company that specializes in bookkeeping, tax prep, and CFO services for real estate business owners. And y'all, in today's show, you can expect to learn where to start if you really are a hot mess, whether or not you should get an LLC, what you can and can't write off, how you know it's time to hire out bookkeeping services, and stick around to the end for the 4 red flags that you might see in VA bookkeepers that could cost you thousands. Guys, you're listening to the Real Estate Rockstars podcast, the show for agents who've been around the block and are ready to build sustainable, scalable businesses that you actually love. My name is Shelby Johnson, and quick surprise, in case you haven't heard, after a year of hosting this beautiful podcast, I have decided to hand back the reins so I can fully focus on building my agent business from the ground up here in Lexington, Kentucky. So y'all, August 2024, this month is my last month hosting. If you want to follow my journey, head over to Instagram at The Shelby Show. But for today, Rockstars, welcome Michael Glaspie. Michael Glaspie. Let's pretend I'm an agent. I'm out there swinging. I'm hustling. I'm generating leads. I'm closing deals. And, the last thing on my mind is keeping track of all these little financial details. So can we start big picture? Why should we care? We know we should care, but why? And let's go from there.
So ultimately, the biggest reason why is because we go out here, we bust our ass, we make a ton of money, but we want to keep it all. Right. And if we don't actually track where the money's coming from and we're not doing our books appropriately, you know who's going to take it from us? Good old Uncle Sam. Right. Or somebody else could be creeping in our pockets and we have no idea because we're not actually tracking those expenses. So ultimately, we earn money because we want to keep it. And that's the most important thing.
Okay, gotcha. So now I'm bought in. I don't want to give my money to the IRS or to other people. So how do I get started? What is I've been an agent hypothetically a year and I've done nothing properly. So what steps do I need to take to get my shit together when it comes to this?
If we have absolutely no idea where we are in our business, the first thing that we can do is just print out our bank statements, see where we're spending money, how much money we're making, and start to get a picture of, okay, January comes, guess what? I have my MLS dues. Or July comes and guess what? I have my privilege license in the appropriate states, or I have my license renewal. And so now we start to get a pattern of how much we need to spend in what key areas. Right. Once we understand that, then we can go back to doing what we enjoy doing, which is sales, working with people. We can have a good understanding of, all right, you know what? I have more expenses coming in September. So let's see what I can do to increase my sales in September, or make sure I have enough money stored away if September is a slower month for me.
Okay. So it's kind of beneficial to have history to look back on, because hypothetically, Absolutely. This agent's been doing this for a year. They can go back and pull their past 12 months, export their bank statements, which in theory, and can you talk a little bit about business banking versus personal banking?
Yeah, 100%. So business banking and personal banking is the exact same thing. The difference is, if we get in real technical here, it's who owns the bank account. So on a personal bank account, it's going to be your name, my name, Michael Glaspie, your name, Shelby Osborne. But the business bank account is going to have the business, 123 LLC or Michael Realty LLC. That's who's actually going to own it. As far as the functionality of it, it's all the exact same, right? It's all the exact same there. So business and personal, as far as creating it, is very simple. Now, to your point, what's the difference as we're tracking it is, most of us have heard this before. There's this evil thing that exists out there called commingling, which we're all guilty of in the beginning for sure. But it's, hey, make sure that every business expense that I'm swiping on my credit card or my debit card actually belongs to the business. not for my Uber Eats or not for my Walmart grocery store or whatever the case is. Let's make sure that it belongs to the business. So there's some nuances with that, but ultimately they're pretty similar.
Okay, so it sounds like you recommend, like hypothetically, I'm that agent has been in the business a year and so far it's all been in my personal, it's all commingled. Should I go out and get a separate business banking, whether or not I have an LLC? Should I get a business bank account? Should I get a business credit card? And, bonus question, there's a lot of agents who ask, should I get an LLC? Do I need that?
Great questions. All right, so let's break it down. Here's the biggest thing that we are concerned with as entrepreneurs, the newer agent. We want to be able to take into account all of the business extra deductions that we can, so we can save in taxes because we're going to earn a lot of money, right? If we're not treating it like a business, then the only deductions that we can take are our personal deductions, which are far less than what we can on the business side. I'll give you an example. A standard deduction for a single individual, if you just piled it all together and went to the IRS, is going to be $12,500. That means if you made $50,000 and you took the standard deduction, they're going to subtract that $12,500, and whatever that remaining amount is going to be your taxable income. But when it comes to business, instead of we're going to avoid that standard deduction there, or we can keep that on the personal side, but now we also get mileage. We also get meals. We also get our conference tickets that we pay for, our airplane tickets, all of these other things that are associated with the business that we can also tack into there. So if we're not treating our finances like a business, that's where we miss out on all of that. So to answer your question, brand new agent, what I recommend is you at least get a separate bank account, period. Doesn't have to be business, it can be personal, but a separate bank account that you run all business activities out of. All right. Now, at that point in time, you have proof that you're treating it like a business. So that's the first step. All right. Now the question becomes, do I create an LLC or not? The whole concept of an LLC, there's two things. Either you create an LLC to limit your liability, meaning if somebody sues you, they're really suing the entity. They're not suing you personally. But right before that step, and you're still treating it like a business, it's called sole proprietorship. All right. Sole proprietorship, you get all the business deductions, but you don't have any protected liability. Very easy to do. Okay. Highly recommend that realtors at least recognize that, speak with their tax advisor, their CPA, or whatever the case is, and make sure everything is in order so they can get the deductions as a sole proprietor, because we all are. Now, the idea of the LLC is, what are you trying to protect? All right. If you're going out there, you're dealing with buyers and sellers, and you're dealing with maybe like property management where you have tenants that you're controlling and investors, every person that touches a piece of your deal potentially could sue you. So now what we're saying is, hey, look, if you sue me, sue my business. Sue Mike Realty LLC. Don't sue me, Michael Glaspie, as a person. And that's where that conversation starts.
But with that, okay, so Mike, there's like a million different ways I want to take this right now. But on this track, just because I know I get asked this question all the time too, should I get an LLC? Like everyone asks that getting started. So my question to you would be, most brokerages, depending on your firm, they have some sort of E&O insurance policy, and or maybe they require coverage. So E&O covers you enough, or should I still get an LLC? And then also, if I do get the LLC, I know from personal experience, there is upkeep, there is cost required. So can you kind of just talk through like the pros and cons of all of that?
Yeah, 100%. If you're going to ask me, I always get an LLC. That's just me, because I want that extra protection. So just to your point, if somebody goes to sue you, you do have errors and omissions insurance, E&O insurance. And the question is that insurance going to be enough to cover that specific incident or that specific lawsuit, that amount? Okay. Anything above that, they can essentially go for you or to the brokerage, depending on how your E&O agreement is set up with your brokerage. So if you have an LLC, now what you're doing is saying, okay, attack everything in this LLC and keep me separate. So me personally, I always recommend an LLC. It's that extra layer of protection. Now, with that being said, there are some brokerages out there that say, hey, look, if you're going to have an LLC, I don't care if you're running business through your LLC or personal, you need to have a firm license. And so now to your point, that's extra upkeep, right? But the extra upkeep, the small amount, is it worth the protection for you?
Depends on your own risk tolerance.
Exactly.
Okay, I think I'm good enough with that one right now. Okay, let's go back to the LLC versus sole proprietor versus, if I'm listening to this and I'm like, I don't think I need an LLC right now. I know there's going to be upkeep. I have a lot of coverage through my E&O insurance. Like I'm good. I'm good on that. But you mentioned sole proprietor. So that way you could have the business deductions. So what do I have to do to formally become a sole proprietor, if anything?
Yeah, great question. So formally, all you need to do is go to the Secretary of State website and quite literally start a new business or file for a new business or a business registration, depending on your state, and just look for sole proprietor. And it takes you maybe 5 minutes to complete. It's a small fee and you're good to go. All right. Now, in reality, you can operate as a business and most CPAs will still treat it as a business. All right. For your first couple of months or so. But unless you actually create that actual entity, then what's happening is you haven't legitimized it. And so if you continue to operate outside of some sort of formal structure, like a sole proprietorship, then the IRS could potentially come down and audit you, during that range or during that time frame and say, all right, you took all these deductions, but it wasn't officially ran as a business.
Okay, at this point, I have listened to you and I've gone out and I am a sole proprietor, formally or not, whatever. I'm my own business. I have started my business banking account. I also got a business credit card, of course, because I'm going to rack up those points because I'm smart. And at this point, you've mentioned deductions a few times. So yeah. I am like, I did all these things and I don't know what is a deduction, which isn't. These waters are muddy. Can you help us with that piece?
So the primary thing that all of us can do in the beginning is just keep track of what expenses that we're paying for. Keep a note of it, maybe highlight it. I know a lot of people like to just print off their bank statements, maybe highlight for different colors. So as an example, all the expenses would be red. Any major expense might be blue. And anything that's unordinary might be, orange or something to that effect. And then when you deliver it to your tax preparer, they know exactly what these different things are, and they know how to properly account for them. Because if you're trying to do it yourself and you just turn in and say, hey, this is how much money I made, this is how much money I lost, go ahead, Mr. and Mrs. CPA, go ahead and file that for me. You could potentially be shooting yourself in the foot and costing yourself a lot of money.
Okay, so I'm keeping track of everything I'm spending money on, and I'm going through it, and I'm generally categorizing with my highlighters, hypothetically, or however I want to do.
Right.
What are some main categories? Earlier you mentioned mileage, meals, conferences. I know that a lot of agents want to write everything off. Like literally they're writing off like their haircuts, their new shoes, their groceries, the wine that they bought for a party that was a business party that wasn't. So can you, or maybe it was, but can you walk us through kind of like the major categories and what we should be tracking because of their definite write-offs versus, hey, you shouldn't probably do that?
Definitely. So when we look at expenses, there's a few primary ones. It's going to be your advertising and your marketing. Okay. Anything that we're spending on that could be your Zillow subscription or whatever the case is. You are going to want to look at any type of wages, contractor wages, virtual assistant wages, anything like that. You're going to want to look at all of your travel expenses, which includes airfare. It includes rental cars, things of that nature. You're going to look at any office supplies or office expenses. And that's going to be, I got to buy more listing packets or more buyers packets. You also want to take a look at different uniforms. If you guys are buying uniforms with your brand on it, that's a great opportunity to have a deduction. And the list kind of goes on from there. Now, when we're thinking about the different things outside of that you want to make sure you're tracking, but you may not necessarily want to just do your own finances and write it off, will be things like mileage. Okay. And the reason why is because oftentimes people get it confused. They'll say, hey, I'll pay for gas, right? But I also want to get mileage. It's like, no, you only get one or the other. And so if you're sitting down writing off gas, but you try to claim mileage, you might again put yourself in a bad situation for an audit. So mileage, meals, things like that, you do want to keep track of, but allow your tax professional to tell you exactly how much of that gets broken off. Another really good one is home office expense that a lot of people don't know about too, right? Where you can actually take a piece of your home and say, hypothetically, let's say it's 10% of your home you use for your office.
Mike, you said keep track of several times, and this is something that I know that listeners are feeling anxious about because they're like, man, I track almost nothing, and now I have to keep track of meals and whatever. So my question for this is, do they have to keep receipts for everything, or is the fact that it's on a bank statement in their business banking account enough? What's the deal with receipts?
That's a great question. So honestly, can you deduct it with it just being on the bank statement? The answer is yes. Absolutely, you can. Okay. The whole idea of the receipts is that's the right way to do it. All right. And the reason I'm using parentheses here or, sky marks is because let's be honest, if you do not get audited, then you're okay. Like the bank statement is going to hold up. If you do get audited, one of that audit agent may come down and look through those different line items and say, all right, this one here, show me proof. And now if we don't have a receipt, all it says is Venmo or Zelle, and we just classified it as something, and then when we go to our Venmo or our Zelle or something, and it says, something obscure, whatever it is, then we potentially are going to cause that auditor to start diving in deeper and asking more questions, which none of us want, especially if we don't like tracking things, right? So the idea is the receipt is the right way. It's the best way. But the bank statement can allow you to at least take the deduction.
What's the worst thing that can happen if you do get audited? Like, what actually happens? Like, is everyone going to jail? We're all just going to jail, or we're paying like 1 million fines. What is, some people are having nightmares. Help.
When I said this is how I started to age myself. I was talking to my little sister and I was like, yeah, you don't want tax fraud. You don't want to be like Wesley Snipes. And she just looked at me with a blank stare, like, who is Wesley Snipes? I was like, Jesus Christ. All right. So the worst thing to do, or the worst thing that can happen with the audits, the worst thing is that you get identified for tax fraud. That comes with jail time and major fines. That's the absolute worst thing that can happen. They could seize your assets, all that good stuff to force you to liquidate and all that. Now, what's most likely going to happen is something's going to be found. As long as it wasn't negligent, it was a mistake somewhere, then they're just going to make the adjustment. And if there is any difference in payment of what you owed in taxes, they're just going to ask you to pay that. In a real world scenario, they're going to ask for it, but they'll also, depending on the amount, give you a period to pay it back. So you can even create your own payment plan, if you will, for some of those. So it's not the end of the world. But what we don't want to happen is, what it says is the when we look at the code, it says we can go back, or the IRS can go back up to 7 years. But in reality, if they start pulling at strings, they can go back even further. And we don't want them to go back any further. We don't want them to ask questions, because once you get something amended or changed, it's not just for right now. We're in 2024. They go back to whatever, say it's 2015. If they amend 2015, well, 2016, 2017, 2018, 2019, all of them have to be amended. And it is just a pain in the ass to deal with.
Yeah, this is actually a legitimate nightmare.
Yeah, exactly.
I'm like, please never happen to me. Get to that 7-year mark ASAP. Okay, I'm not quite done with receipts. So, or tracking. So I got the receipts now. It's like, yes, we should cover your ass, keep all the receipts, keep all of your tracking and bookkeeping like immaculate, of course. Do you have any tips on actually maintaining this? Because there's agents out there right now listening and they're like, man, every single month goes by and I'm like, I know I should do that. And then another month. And now they're like looking back on 3 years. So what do you recommend? Do you like monthly, going back and looking at this, weekly, daily? Is there like an app that you prefer or have found useful? Hit us with all that.
Perfect. Here's the easy button. Every time you guys have a receipt, take a photo on your phone, and then in your photo album, just create a small little album called Receipts. All right. If you can even break down that album to January, February, March receipts and all that good stuff, that's even better. Okay. That's perfectly fine. So that's the easy button, because that way at least you have it stored somewhere. Now from there, making sure it's all up to date, you want to make sure that you are updating your own record somehow at a bare minimum once a month, at a bare minimum. Because let's be honest, if you ask me what I did last Monday, I have no clue. I have no clue.
Same.
I go back to my calendar, but I mean, like even that, I'm like, I don't know. So asking somebody, what'd you do 7 months ago? Which is just annoying. Hey, because I know you've gotten this. We've seen this together. Hey, what was this transaction 2 years ago in October? Like, bro, chalk it up. Owner contribution.
Dude,
I don't know what
right.
that is.
I get creative,
Yeah.
I mean, not me. Hypothetically, this agent I always talk about, this hypothetical agent.
Right. So in a situation like that, you want to make sure that you're going back every month at a bare minimum and saying, okay, all these numbers make sense. I'm good to report this. Now, here's the best app to do it all. It's QuickBooks Online, in my opinion. There's a ton of different apps out there. There's a way to record receipts and this, that, and the third. But as a pure platform that is meant for accountability and financing, QuickBooks is one of the most universally known. So once you get kind of just used to uploading your receipts in there, anybody who's trained in QuickBooks can just go in there and do the rest, right? But if you have a special app or a private app that only a few hundred people use or a few 100,000, it's going to be harder to find somebody else to go in there and kind of clean up your mess, right? So my recommendation is always QuickBooks Online.
And that leads me straight into my next question. But real quick, before I ask my next question, just a note on the cheat, take a picture of the receipt and put it in your photos in a folder. Something that is really helpful now too is the fact that you can now search within your photos. Like you used to not be able to like literally type a word and have it search and pull up. And now that you can do that, it's amazingly helpful. If you didn't know that, surprise, you can search your photos for keywords. The other thing is, if you're listening to this, I used to use Hurdler. And that is a really cool app if you are looking for like a simple solution that's geared towards real estate. It makes it really easy to track your mileage, and you can just swipe left or right for whether an expense or not. So check out that one. I haven't used it for a couple of years, but I remember it being pretty good. But what you led me right into, Mike, was my next question, which I hear this all the time. When should I hire it out? At what point do I know I should take this off my plate? At what point is it worth my time to focus elsewhere versus like the cost of bringing someone on? What about that?
That's a great question. And here's what I always ask the individual back, because they always ask that as well to me. My question is, do you understand fundamental accounting? Can you explain debits versus credits? And do you know what expenses that you can take today versus what you can only take later on? If the answer is no, you need to hire it out right now. Okay. Because ultimately, as you're tracking these items, money, this is typically what happens. Let me put it this way. When we don't really understand accounting, what we're tracking is money in and money out. That's what we track. As a newer entrepreneur, as a newer agent, it's like all this money came in, all this money came out. I'll give you a perfect example. Credit cards. One of us gets a credit card early because we needed to kind of set up our business. So we swipe that credit card. Our credit card payment, let's just call it $200. So you know what we do? An expense of $200. That's not accurate. It's not, because the only expense that we have is the interest that we paid on that payment. So the interest could be whatever, call it $100. All right. And so as we start to calculate all of these things, and then we go to our CPA and say, here you go, this is how much money I made and how much money I spent. This is what I should be taxed on. The CPA is going to fill it out. Be like, all right, great. All you showed them was bank statements and an Excel spreadsheet. Cool. Got it. Done. I'm going to charge you $700, $500. We're done. But if you go back and get audited, all of that is incorrect. You have no idea how much money your company really made on the taxable side. All you're really looking at is cash flow. So if you don't understand these things, I always recommend out the gate, leverage it out. Now, if you got a good general idea of how it's going, then leverage it out as soon as it's, you push it to the back of your agenda because you have too much on your plate. Right. As a realtor, we're worried about deals. One of our first recommended hires is typically a TC, right? So we can put more deals on our plate. And now we may start marketing to get even more deals. And now we're ready to hire our first agent. So the accounting side can trickle to the back of the mind very quickly. As soon as you see it falling apart and you're like, oh, I can't keep up with it once a month, then leverage it out.
Applies to so many people listening. So the next question that they're thinking is, first of all, agents be cheap. You know what I'm saying? They don't want to spend any money. So regardless of the fact that they're probably missing out on tons of money at tax season because of their improper bookkeeping, it's one of those things where people don't want the upfront smaller expense and they would prefer to have the long-term pain. It's just, that's one of humanity is interesting. But when it comes to hiring, because they're like, I don't want to spend money, right? Which no one really does, because the thought is, I'm just going to go on Fiverr, I'm going to go on Upwork or whatever. I'm going to go and I'm going to hire some VA who says they can do bookkeeping for $5 an hour. Do I do that? Or I mean, that could possibly be a good option, maybe, but what's the difference between that versus hiring a bookkeeper, like an established one? And if I hire the established one, what should I be looking out for? Just this whole category, Michael, please.
Right. For sure. Because let's be honest. And we've been in this game long enough that we know that not every practitioner is created equal in their ability to do things. It's just not. So you're going to run across a bookkeeper who says, yeah, I'll do it for $4 an hour. I'll do it for $100 a month. And the problem is they don't understand real estate. They don't understand your market. They don't understand the trends. They don't understand the terminology. And so when you're trying to explain to them, like, what does this mean? And they're like, oh, well, technically, because in the college says this about accounting, this is what it means. It's like, but that's not even useful for me as an entrepreneur. So when you're looking at these things, it's perfectly fine to hire a VA for $5 an hour. Perfectly fine. Matter of fact, we have some overseas independent contractors in our company that do some of our bookkeeping for us. These are the things you want to look at when it comes to that. One, do they know your industry? Your industry. Do they understand real estate? Do they understand real estate agency? Okay. Two, so you can look for that in their resume. Have they worked for somebody else at another agency, things of that nature? The second one is, do they understand U.S. accounting? Because U.S. is unique as always, right? We like miles when everybody else in the world use kilometers, right? We have a specific accounting system that we use that other countries do not use. So do they understand the U.S. accounting system? The third thing is, can they explain it to you to where you understand? Because it does us no good if they're using those big terms. Your gross profit margin of the current ratio is 2. You're just like, bro, just tell me how much can I spend this month, right? That's what you need. And those are the primary things that I would look for. The fourth thing is speed of delivery or consistency of delivery. So there's a lot of bookkeepers, and I know that you've experienced this too, where a bookkeeper says, yep, you give me everything, I'll get it done. And then 3 months later, they're back behind again. We can't afford that in our business. We can't. We got to know what we can spend this month so we don't overspend. So making sure that bookkeeper is timely delivery. And you could do that through hiring them on for a probationary period and things of that nature. But those are the 4 top things I would recommend looking into.
At this point, we've talked about bookkeeping, but we've also dabbled on, talk to your CPA or your tax, I forget the word you use, tax person. So can you help bring clarity for those who are like, wait, I thought like books and taxes, that was all kind of the same thing. Like, what are the roles and responsibilities of the bookkeeping realm versus the tax prep / whatever? You tell me.
I'm glad you asked that question, because everybody thinks the CPA does bookkeeping and the bookkeeper can do taxes or CPA work. So what a bookkeeper does, a bookkeeper is data entry. What they're doing is they're consolidating everything that you've done, and they're making sure that your financial statements, your books, are clean and accurate. That's what they're doing. They're trained on that. They're trained on basic accounting. They understand kind of what goes where, which financial statements, all that good stuff. Now, the tax advisor or the tax preparer, often referred to as CPA, but just so everybody's aware, they do not have to be an actual licensed CPA to be authorized to file your taxes. Okay. So your tax preparer is trained in taxes. They're the ones that are going to see everything that you did, ensure that it's correct, say, maybe we can move this. And their primary focus, let me put it this way, is to help you pay less in taxes. That's their primary focus. They are not a business-minded financier. They're not helping you decide, hey, instead of spending this on marketing, you should spend your money over here. Okay. Their specific lane is helping you pay less in taxes. If you're looking for something more, you're like, hey, bookkeeping's good, but they don't really have enough strategic insight for me. My tax preparer is great, but they only focus on taxes and what I have done. I need some more forward-thinking strategy. Then you'd be looking for something else. And in our realm, that's called or referred to as a fractional CFO down the line. But just to be clear, those are the specific roles of each.
Okay, that's perfect. Okay, what did we not talk about today in this realm that would be important for our listeners to hear from you or understand?
The biggest thing that as entrepreneurs is we don't often have a lot of time to make decisions. right? We often don't have time to decide or 2 months or 2 weeks to decide, I need to hire a TC, who's the best one. Oftentimes, like everything is falling apart. I've let it go on too long. What do I need to do right now? The easiest way for us to be able to make logical decisions instead of emotion-based is to simply know where we are financially. All right. One of the biggest stressors in the world is a lack of finances, right? We have all been there. So if we have control over our finances, we've now gotten rid of one of the largest stressors, and we can think clearly in those times of distress. That's honestly the difference between somebody who can live in this entrepreneurial realm for decades versus somebody who gets in and gets out in less than a year or two.
Totally. And that's the difference too between being an actual business owner versus just keeping your head above water every single day. You know, the business owners are the ones who are able to like really have clarity on their numbers and look at where they are now, past trends, and then look into the future and project, make smart decisions for, you're right, not just today, but for 5, 10, 15 years down the road. But Mike, what do you do and how can you help our listeners?
Of course. We do it all. We do bookkeeping. We do help with tax strategy, and we do fractional CFO services. The biggest difference about us is we primarily focus in the real estate industry. That's our background. Collectively in the team, we have over 4 decades of real estate experience, real estate practitioner experience. So we really understand the space, and we really understand how the nuances of the financing work. So if anybody is interested and looking for some of that entry-level bookkeeping, then we can definitely have a call and go from there.
Mm-hmm. And for those of you who don't know, Mike is actually my business partner and not in this space, not in the bookkeeping space, but Mike and I were introduced back in when he was just getting out of the Army. I had just gotten out of the Army. He was an investor. I was an investor, and we built 5 Pillars Realty Group in Fayetteville, North Carolina together. He and I have done so many flips, and we currently hold, I don't even know how many units together in our rental portfolio. And we have gone through every up and every down in this crazy business together. And of course, now after he and I have like literally worked for years trying to find the right bookkeeping team and, tax provider, all that stuff, he is my bookkeeper and CFO. So obviously he's awesome. You should check him out. But Mike, where is the best place for people to reach out to you?
The best place is to simply just go to the website. You guys can find us there for any information. But if you guys want to reach out to me, Instagram is probably the best way to get to me. And all that tags will be there in the show notes, I'm sure. But Instagram at michael.s.glaspie. LinkedIn would be another good way to get to me, and just reach out, connect, and we'll go from there. And it's Glaspie with IE, not Y. Yes. People often don't know how to pronounce it or spell it once I say it. So that's right. It's Glaspie. Yeah. Cool. Love it. And guys, you know the drill. If you want to hang out with me and the owner of the show, we are The Shelby Show and Aaron Muchastegui on the gram. But otherwise, that is all we have for today. Mike, thanks so much for hanging out with me. And Real Estate Rockstars, thanks for listening.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.